Well, the United States and China have just announced a new deal, one that includes concessions from both sides and promises to ramp up trade between the world's two largest economies. But while US media is celebrating this as a major geopolitical win, the Trump administration has been suspiciously quiet about the actual details. And that silence, it tells us there's a lot more to this story. Just listen to this insight from Su Yue of the Economist Intelligence Unit, who states, Trump said China would supply magnets and rare earths, but gave no clear explanation of what the US is offering in return, except for student visas. But China wouldn't have agreed unless it received other meaningful concessions. Trump seems to be framing the deal as a win for the US, but that could actually signal that China walked away with more. In today's video, we'll break down the hidden truth behind this so-called deal, explain why China's grip on rare earth elements is the real power move, and what the future of US-China trade will actually look like. But make sure you stay tuned until the end, because I'm bringing in a special guest, a CEO from the mining industry, to help us all understand why rare earths and gold are quickly becoming the most valuable and strategic assets in our new global economy. Let's dive in. Now, when it comes to US-China trade, most people are focused on tariffs, but the real battle, the one doing the most damage, is over export controls. And this is exactly what took center stage in London as US and Chinese trade representatives met to finalize this new deal. Currently, the US is restricting the export of high-end microchips to China in an effort to stall its technological rise. And in response, China is blocking rare earth elements, critical materials that power everything from electric vehicles to smartphones to US military systems. But here is the key difference. The US is playing defense, while China is playing for unity and leverage. Just listen to this clip from Hao Hong, one of China's most influential economists and Bloomberg's Business Week's Person of the Year in 2024.
The American consumers probably can't live for much longer at the higher prospect of much substantially higher inflation. How this trade war started, it actually somehow united the Chinese people together. If you're in mainland China, you can really feel the atmosphere, rooting for President Xi and also rooting for China in this negotiation process.
This is a powerful insight that you won't find on mainstream media. China is using the trade war to fuel a new kind of nationalism, one rooted in economic independence and technological supremacy. This unity gives Beijing massive leverage, because while public support for the trade war in the US is fragile and divided, in China, economic pressure is seen as validation that their model is succeeding. And that brings us to China's trump card, rare earth elements. Currently, China controls over 70% of rare earth mining, and far more importantly, over 90% of the world's processing capacity. That's not dominance. That's a monopoly. These materials are needed in a majority of modern industries, from jet engines to electronics like smartphones and flat-screen TVs. They're even crucial for MRI machines and some types of cancer drugs. As you can see, rare earth elements touch many sectors of the US economy, and it's exactly why the US government has poured over $439 million from the Department of Defense into jumpstarting a domestic rare earth industry. But even with the subsidies and political willpower, the truth is that any rare earth successfully mined by the United States would still have to be shipped back to China to be refined into usable material. China is literally the only country on the planet that can refine these materials to 99.99% purity, even if everything goes perfectly for the US. Experts say it would take around 10 years for the US to start up a processing chain capable of competing with China. Now, to really drive this point home and show you how vital these rare earths are to America, I want you to look at this Wall Street Journal article, which reveals automakers race to find workaround to China's stranglehold on rare earth magnets. Major manufacturers, fearful they will have to shut down assembly lines, consider moving some parts production to China. Now, that's an incredible headline. Trump campaigned on the promise of bringing back manufacturing to America, but the US auto industry, which ironically is the last major domestic US manufacturing sector, are now exploring options to outsource even more of their production to China. This, of course, was a major discussion point at the London meeting, with more than 1,000 US companies submitting applications to Chinese officials for rare earth exports. In the end, China approved 98 licenses for rare earth exports to the US, but also stated that they would only be valid for the next 6 months, ensuring that China retains leverage over the US in case of future trade escalations. This was an important win for the US auto industry, who was literally on the verge of shutting down production before this deal was finalized. realized. Okay, so it's extremely clear that China has significant leverage against the US. But what leverage does the United States have over China? For the past few years, the US government has been blocking China's access to microchips, advanced lithography machines, and other key areas of technology. And while these export restrictions have certainly caused China short-term pain, it also forced China to become more innovative. As the saying goes, necessity is the mother of innovation, and China has had no other option but to work harder and close the technology gap. When the US stopped exporting advanced jet engines to China's aviation industry, the Chinese built their own engine to supply the domestically produced C919 commercial jet. Even Jensen Huang, CEO of America's most prolific tech company, NVIDIA, now admits that China is quickly closing the gap in the microchip sector, with a new report showing that Huawei's advanced chips are only one generation behind the United States, with billions of dollars being invested across the country to close that gap. But despite China's tech advances, there is a specific industry in which China is heavily reliant on the United States, and that is ethane gas. Interestingly enough, the US is the world's largest producer of ethane, and China is the world's largest buyer. China needs ethane gas to produce ethylene, which is a crucial component in plastics, packaging, and chemical manufacturing. Basically, all the industries where China is dominant. Now, the United States sells approximately $2 million of ethane gas every single day to China, but in early June, began to restrict those sales in an effort to contain China's rise. But very quickly, the United States realized that it doesn't have the same amount of leverage as does China. Take a look at this article from the Center for Strategic and International Studies, which bluntly states the reality of America's decision. They inflict more damage on US companies than Chinese competitors and undermine confidence in American supply reliability among allies. Rather than demonstrating US resolve, these poorly conceived controls reveal a troubling pattern of assumption-based policymaking, seemingly devoid of rigorous analysis. These controls fail to clear even the lowest bar for an economic weapon. Wow, that's an incredible insight, and again, something you're not going to hear on mainstream media. While the US dominates global ethane supply, cutting off exports to China have now backfired and are hurting American producers considerably more than China. While US automakers would literally have to shut down their factories without access to China's rare earths, Chinese factories would simply see a 5 to 6% reduction in ethylene capacity if the US were to cut off 100% of its ethane exports to China. In this game of leverage, rare earth minerals are irreplaceable. Ethane, not so much. And once again, this article reveals the truth. The ethane export controls represent everything wrong with contemporary US economic statecraft: poor analysis, inadequate preparation, arbitrary implementation, and stubborn persistence in the face of obvious failure. While America's ethane restrictions against China have failed, we need to take a step back and ask a bigger question. What's more likely to happen in the future? Will the United States build an entirely new rare earth supply chain from scratch, or will China master the very technologies that the US is trying to withhold? While industry experts project the time needed for America to develop a rare earth supply chain in decades, China is already on the cusp of overcoming the last few remaining American tech advantages. Not long ago, the West held what many believed were unshakable leads in electric vehicles, renewable energy, high-speed rail, and battery technology. Today, China dominates them all. The technologies the US still controls are only a generation ahead, and China has already laid the groundwork to catch up. With massive investments in education, talent, and R&D, the pieces are now in place. It's just a matter of time before China catches up and realistically even surpasses the United States. The biggest conclusion from this meeting in London is that despite all the rhetoric you hear in our media, the US and China must work together. This is why even Donald Trump, the man who at one point tariffed China with 245% tariffs, called President Xi and asked for this high-level trade meeting in London. Simply put, the US economy cannot survive without China, and China will remain the dominant global manufacturer and key producer of the rare earth elements that power so many sectors of the US economy. But as promised, let's take it one step further and invite a special guest onto the program to help us all understand the macro trends driving our global economy and why mining is an important sector that cannot be ignored. Well, everybody, as promised, I wanted to bring in a CEO of a mining company to really give us some good insights into this industry, but also what's going on in the macro. Blake, how are you today?
I'm fantastic, Cyrus. Thanks for having me on.
Fantastic. Well, Blake Morgan, I know you're the president and CEO of Opawica Explorations, Inc., and I'm so excited to have you in the studio because we want to provide a lot of value back to our viewers. And getting a CEO like yourself to come into the studio is awesome. Blake, my first question for you is, we've seen an unprecedented rise in gold. Up over 43% over the last 12 months. This sector is really on fire. Not only gold, but many crucial minerals and many critical rare earths. Why is this mining sector so important? Why is gold so important right now in 2025?
Well, it's very interesting times. So you've got global economic uncertainty, high inflation, interest rising expectation. And the big one for me is the weakening US dollar. Just this year alone, it's down nearly close to 9%. Your normal man sitting there with a couple of dollars in the bank, he's just losing money having it saved. Obviously, you've got strong interest around the globe from banking. So you're seeing countries just buying gold at record numbers. And now the retail market is also getting on top of this. So they're seeing that gold has been very safe haven for a long, long time. So now you're starting to have that retail sector move into things. And then also, which is quite important, your geopolitical risk. You obviously have Ukraine and Russia. You have the Middle East tensions with Palestine. You've got Iran involved there, obviously Israel. So worldwide, we're seeing a few things that obviously help lift gold up. And I think we're only just sort of seeing the beginning of this. I think over time, things are going to increase in the gold sector. You're having a lot more, like I mentioned, retail, banking, institutions coming into this market. And I say we're going to see 5,000 USD gold. My prediction is within the next 12 months.
Wow. That is very bullish sentiment. Love hearing that because I've been a big investor in gold over the years, and I know it's a great way to hedge. We have many investors that watch this show, and I love that you mentioned the geopolitical risk. Also, the de-dollarization is something we're seeing from a lot of countries around the world. These are big topics that we cover a lot on this channel. But Blake, take me into the North American sector specifically, because I think there's been a big push in North America specifically to start mining here. There's a lot of sectors that are really on fire here, and you have an interesting area of the world that you're in. Tell us a little bit about, specifically the North American market, for gold mining.
Yeah, so North America is phenomenal right now. So you're seeing in America, obviously, country first. So they want to focus on their own critical metals, their own gold, their own copper, and that sort of thing. And you're seeing that globally. So in Canada, you're seeing the same thing. America is seeing the same thing. Australia, worldwide, it's happening. So country first policies are really coming forward. And that means the governments are really pushing towards, your critical metals, obviously your gold resources and your copper. So, North America is prolific right now for mining investments, obviously gold. And then also you have your government funding program. So there's a lot of taxational benefits right now when it comes to the mining sector, just because governments are realizing these are the commodities they need to have to move forward. Obviously, gold itself is a very safe haven, and then the critical metals are for usage worldwide. So, yeah, North America is looking fantastic, and it should continue down this way for years to come, I'm presuming.
I think so as well. Especially like in today's video, we talked about the rare earths and why this is so important for the United States. And so many things, even from like the F-35 fighter jet to many of this armored vehicles. So much of it relies on this, and I think that's why, like you said, even things like copper or tungsten, gold. All of this is needed. But, Blake, I really like bringing you in because you're an interesting guest for our show. You're a third generation miner. This is really in your blood. You've had a tremendous amount of experience. And I know that you're a CEO. Tell us a little bit about your specific company, Opawica Explorations. And I really want to know a little bit more because you're doing some amazing thing in the space. I really want to give you an opportunity to showcase that to our viewers who are, very interested in this.
Yeah, well, thanks. Well, I'll keep it short because I could talk about it forever. So, yes, I am a third generation miner. My grandfather worked for Rio Tinto. My father worked for Rio Tinto, and that's where I got started. So, worked for these major companies in Australia, moved across to North America, and we put together, obviously, Opawica. So we're situated in North America, one of the most prolific gold-bearing regions on Earth. Where our properties are, we're surrounded by majors. One of them is, for example, Agnico Eagle. It's got a market cap of around $60 billion. Wow. So, you've got our company sitting there in one of the most prolific regions on Earth, surrounded by majors. Just on our property, we can see 7 active mines. One of them is the biggest gold mine on Earth from Agnico. Our other side, our next door neighbor, just got bought out in 2023 for $4.6 billion.
Wow.
So the region's insane. And we're, just a little company in there spending money, doing the right things. And, we have road power, hydroelectric power it is. So all our exploration costs are very, very low. We've seen some phenomenal success on these properties. We have people like Eric Sprott. He's put in $2 million into the company, $1 million personally, and $1 million through his Sprott fund.
Right.
I personally am the number one shareholder in the company. I bought over $1 million worth of stock on the open market in the last year or so. So it just shows how much I believe in what we're doing. We also, luckily enough, just got awarded the Gold Explorer of the Year for 2025. So that was good recognition for the hard work we're doing. We love it out there. It's fantastic. And we're hoping to become the next major in that region.
Yeah, and that's fantastic. Fantastic. Well, Blake, what I always look at, in companies is always the management. I think the management is really key, and, certainly having that experience. I mean, third generation miner, but I also love your passion. I love your passion for the industry. I love your passion for your company. I love what you're doing. So everybody, we're going to be putting down all of the notes that you need. So for example, the investor presentation, access to the website, ticker symbols, everything that you need to know so that you can do your own due diligence and do your own research. But Blake, thank you so much for joining us here in the studio today on Real Talk. And I'm just so happy to be able to bring in, a high power CEO like yourself to give our viewers these inside information about the industry. And as we continue to study geopolitics, as I always say, it's geopolitics moves the markets and it causes certain industries to flourish. And it's always important to watch. So thank you so much for joining us today.
It was an absolute pleasure. I'm happy to be on, and having a chat with you was fantastic. So anytime you want to have a talk, let's touch base and have a conversation.
Everybody, make sure you check the description for all of those notes that you need. And thank you all for your continued support. And we'll see you soon in our next video.